back to the channel. It's been a little while, but we're back. We're going to do our TA today for Bitcoin, which there's a few interesting things in the chart that you really need to check out. So I'm going to show you those. We're also going to look at Ethereum, EGLD, and Cardano. To kick things off, though, I wanted to talk about why the Bitcoin market has really been picking up so much, right? We've seen Bitcoin go up about 20% in a week last week. Now, mainly this is due to the news coming out that BlackRock, Fidelity, all these companies are pushing for ETFs. You have Fidelity, Charles Schwab, and Citadel backing a new exchange called EDX Markets. So basically, what this all entails is you see a massive push into the Bitcoin space from large institutions. Now, these large institutions happen to control a large amount of the money in the world. So what you can assume here is that this is going to drive investment into the space. Now, whether or not this is good for Bitcoin's price is quite simple. It is good, right? Because you're going to see more floodgates open to allow capital to come into the space. Whether it's good for Bitcoin and sovereignty long-term, that's another question, because what's going to end up happening is as these ETFs come online and people start investing through brokerages, you're going to see that the users are going to get shares, whereas the actual Bitcoin that's bought to support their value is going to be owned by the companies who owns the share. So BlackRock will own the Bitcoin. Fidelity will own the Bitcoin. So it's basically a way for these big institutions to get Bitcoin that you, the investor, pays for. Now, you get to track the asset with your money and you get to sell your shares and cash out when you want to. You're paying the fees for someone else to manage it. That's what an ETF is. It's the same reason people invest in real estate ETFs and gold ETFs. So it's a very common thing in traditional finance. Overall, good for Bitcoin in terms of price. Could potentially be bad for the users down the road if something crazy happens and, you know, they want to get their hands on their Bitcoin and they can't. So we'll see how those things turn out. But for right now, I don't have any problem with it. It was a natural evolution. So I saw it coming a mile away. And I'm sure a lot of you did as well. We've been waiting for something like this to happen. It's just a little shady that the SEC has been denying Grayscale and all these other companies for so long. And, you know, let's see what they do with BlackRock. I don't really see them denying them, but we'll find out. All right, so we're going to kick things off with Bitcoin. And what I have here is the daily chart. Now, on the Bitcoin daily chart, there's a couple of interesting things. Right now, we are at the same level that we hit back in April when we had crossed over the golden pocket. So we went over the golden pocket, we hit that level, which is right around 30,700 where we are now. We dropped back down below the golden pocket and had a long consolidation, and then we've jumped up. So we really have two price targets that we're looking at. So if we look at the daily time frame, and keep in mind, this is if we're looking on a upward trajectory. We're expecting that the price is going to rise from all this news and we're getting more bullish. Well, this was a consolidation pattern we had, and we essentially broke out of it. Now, in order for this breakout to be a full breakout, what we're really looking at is from the top all the way down to where the breakout started as our flagpole. And if we take that here, roughly from this point, we're looking from a breakout of this consolidation triangle to about 41,000 on the daily. So we have a fairly high mark for where we would see a breakout from this massive consolidation triangle. Now, if you keep in mind that 41K mark, right around 40K, is in our next Fibonacci retracement level, and it's also where we've had a ton of trading throughout the last bull market. So there's going to be a lot of resistance at 40K. So that's one thing that I see on the daily chart. On the bullish side, right, it gives us a target to look at, and that's right around 40 to 42,000 coming out of this consolidation pattern breaking out. So if this follows through, well, then the breakout's not complete yet, right? We're going to continue going until we hit resistance on this Fibonacci retracement line at around 36.6K, and then probably start getting resistance and consolidation inside this triangle. But I think it's more likely that we actually consolidate in this space first between like 32K and 36K. And what I'm going to show you in a moment is going to support that too. So this is the first thing we see on the longer time frame. Keep in mind, this is a longer time frame. We're going all the way from, you know, around March 2023 through July, right? So if we take a look at that, we see something bullish, right? And we've seen the initial step of the breakout. The key with that pattern is really to come back and get support on top of this golden pocket and bounce off of it. Here, we fell through and turned it back into resistance. What we want to do is turn that area into support right around where our 200 exponential moving average is on the daily chart, which is around 28.5K. All right, so that's number one. Number two on the daily chart, a bearish signal that's just flagged. All right, this is the TD sequential. The TD sequential essentially gives you two key pieces of information. When you see a red 9, it means that the bullish run is getting overextended and we're due for a correction. And usually what you want to do is see it consolidate down, in this case to around 29.5, this level here, reset in a daily candle, go back to a 1 and start moving up. We see this very often. Historically, these patterns tend to shine. You see the last green 9 we had was here on Monday, March the 23rd, 2023. And essentially what happened after that is that we came back down a little bit and we reset that TD sequential before we consolidated and moved up. So right now, since we've hit this this green 9, I think that's a little bit of a flag that we may be looking for some consolidation back to the 28.8 to 29K level. Very, very feasible. And then we could see a bounce off of the golden pocket. So keep that in mind. I have orders down in the golden pocket. You're aware of that. And this is why, right? The charts are telling me that we could very well see that area again. So obviously I'm going to have buy orders there. I actually still have some buy orders all the way down here at the 22 to 24K level, just in case, flash crash overnight or something, I get some cheaper Bitcoin. Okay, so we have that. Now we're going to switch over to a shorter time frame, not the daily. We're going to look at the 4-hour, and we're going to see what the 4-hour is telling us. So if we go over to the 4-hour chart, well, the first thing that we see is that we seem to be putting in another bull flag, right? We're basically riding the 20 exponential moving average all the way up. This is a very bullish signal. You also see that we are well above the 45 level on the RSI, and we are actually getting support around that 45 area, which is what we really want to see when we're looking bullish. We're also starting to see on the 4-hour that the MACD here at the bottom looks like it's about to flip bullish, meaning go green and start moving its way back up. And we also see that we're about to have a bullish cross on the MACD. Now, some of these things, just ride to a certain degree, and then you could just see a drop, right? It could happen. But the charts are looking bullish so far, especially because here we have a clear indication that we are holding that 20 exponential moving average. So now if we look at this and we try to extrapolate a pattern from it, well, what we really see is a traditional flag triangle, like symmetrical triangle pattern, right? So I'm going to go ahead and show you that. So if we look at that symmetrical triangle, assuming that we do have the breakout out of this that it suggests in the time frame that it suggests, well, it suggests that we're going to be breaking out sometime between now and Friday, June the 30th, maybe on Friday, June the 30th. It could even happen today. Who knows? But that's basically what it's showing us. It's showing us that we would be consolidating here until we break out. Now, remember, the trend is your friend until it ends. So this trend is going to be our friend until we get to the point that we've gone past this time frame and we create a longer or new trend. And then, we may be extending this triangle and doing something like this, right? Depending on where the price goes, we could see this extend and we could keep moving in this area, and that pushes us all the way out to July 7th. So we keep monitoring them at the time frames that make sense so we are aware of when we may see moves. And right now, this is what it's telling me. And if it's anything like the prior pole move, which is normally how you calculate these things, then we're looking at this to take us somewhere up to around the 34 to 35K mark, maybe topping out at 35K and starting that consolidation in this wider area that I showed you on the daily chart. So this is just a zoomed in view of what you were seeing at the daily chart. So you can now look at it at a shorter time frame to see what's really happening in that 4-hour candle price level. Okay, so that's really what we're seeing in terms of bearish news for Bitcoin. I mean, you never know what's going to come out of politicians' mouth these days. Anything could really happen to change market sentiment. But at the end of the day, I think the market's starting to realize that Bitcoin is resilient. And that's partly because when you have names like BlackRock, Fidelity, and all these, big, huge, gigantic companies that manage so much money coming into this space, there's a reason they're doing that. They're not coming into this space for no reason. They're essentially legitimizing it for the vast number of investors that do not want to get into crypto and buy wallets and buy assets and risk losing their keys. There's a technological gap right now for a lot of older investors that control a ton of money, even newer investors that aren't as tech savvy, right? They may have a lot of money. They may not understand Bitcoin or know much about it, but they may want to have exposure to it as an investment vehicle. Some people right now just buy MicroStrategy for that. But I think we're going to start seeing a lot of people putting money into these ETFs, and you might see a lot of those being other companies and funds pension funds, 401ks, things like that. You see a flood of money, even if it's 1%, that turns out to be a big, big number if it's 1% of a very large amount of money, like $1 trillion or 2 trillion or 3 trillion or 10 trillion, right? A percent of that becomes very, very big. You're talking about hundreds of billions of dollars that could flow into the Bitcoin ecosystem. And as that money comes in, price does not always correlate with market cap. Just because 100 billion comes in, that doesn't mean the market cap's just going to go up by 100 billion. People are going to be bidding the price up. And as that happens, the price could go 2x, 3x, 5x, who knows, right? It could really go anywhere when you have that kind of liquidity flowing in and that kind of demand coming with a finite supply asset. People aren't going to want to sell, but they're going to be buyers. It becomes very interesting. So I think we're gearing up to see moves like this, especially with the halving being less than a year away now. So we're kind of coming into a perfect storm where as we start getting these ETF approvals and the halving comes, we might see a massive flood into Bitcoin. And part of me suspects that these companies, BlackRock and Fidelity and all this stuff, their timing is not coincidental. I think they are trying to get these ETFs approved before the halving so they don't miss out on the price boom that happens during and after the halving. That's my suspicion. Anyways, that's what we're seeing with Bitcoin. It's honestly looking quite bullish. Sentiment is turning bullish again. So I'm not seeing any clear indication of negatives. And I do know that if the price does decide to retreat here, I'm more than likely going to see a ton of support in this golden pocket area. It's a sustained level of support right now. So I'm expecting to see a huge amount of support at 28.9K and even at 28K even. We have a lot of volume support sitting in this level. You can see it on the right-hand side on the VPVR. The amount of volume support here is huge. This means there are a lot of people that want to buy in this range. So as the price drops, if it comes down to here, well, people are going to start buying and it's going to bid it back up, right? That's why you see so much volume support there. So keep in mind, so far, even on the downside, I'm not seeing anything major that's calling a red flag to me, but I am preparing myself by having orders ready. All right, we're now going to switch over and take a look at Ethereum. Okay, so with Ethereum, it's pretty interesting what we're seeing. Basically, Ethereum has been stuck in two price levels, right? Two real trading channels. One of them has been between 1220 and 1530. We saw a ton of volume and a ton of trading in that area in late 2022. And now in 2023, we have kind of jumped out of that past 1530, and most of 2023 has been spent between 1530 and 2000. So in that $500 or so range. And what we're seeing with Ethereum is good price action, but it's definitely not showing the resilience that Bitcoin is showing. Right now, in order for Ethereum to really have a sustained breakout, we're going to have to see it jump past the 2000 level. That's been pretty big resistance. We've hit it once, we've hit it twice, and we are still trading below it. So until we see the price really break that and flip 2000 as support, I think it's very, very smart to keep orders, if you're trying to accumulate, to keep orders somewhere between 1530 and 1650. I think that's a very logical price range for the price to correct. And if you wanted to try to get Ethereum at likely one of the cheaper prices that you'd be able to right now, you'd want your orders somewhere around 1300 to 1450 in this range here, if we lose that 1530 mark. But I think it's a little premature to put orders there. If you put orders there now, you're locking up the money, and there's nothing really telling us that we're going to see Ethereum have that kind of drop. I haven't seen any news negative on Ethereum to that level. It's included in EDX markets. So I'm not really seeing why we would see a massive shift to have Ethereum go down anytime soon, right? It's achieved enough of a network effect that I just don't see the reason for that yet. So keep that in mind. In terms of Ethereum on the 4-hour chart, what we're seeing there is that we have for the last couple of days been riding that 20 exponential, but right now is really the key area, literally now, because we are on that 20 exponential. And the question is, are we going to drop below it and come down back to like 1824 and get support on our other moving averages? Or are we going to bounce off of that moving average and start heading higher towards that mid 1900 mark, closer to 2000? What I'm really interested in is if Bitcoin does have that boom in the next few days, how is Ethereum going to react? Is Ethereum going to break past 2000, or is it going to see a lot of resistance there? Because if it is, well, that's a pretty good trade to buy some Ethereum at around 1800. sell it at 2,000 and then take some profits, right? So that may be a trade I'm looking into, but because of all the uncertainty, I've taken a lot of liquidity off of exchanges, pretty much everything. So depending on whether I see good trade opportunities this weekend, I'm going to be traveling. So maybe I'll, throw some funds on exchanges so I can potentially buy a few things at a cheaper level. The only money I have on exchanges right now are already locked up in buy orders. So I would have to cancel orders to create new ones, or I'd have to put in more liquidity. So I'm gonna have to figure that out, but I'll make a decision as I start getting closer to the weekend. All right, so that's pretty much it with Ethereum. Nothing too negative here unless we lose the 45 level on this 4-hour chart. We have support on it now, but at the end of the day, my recommendation here is still to set conservative buy orders because we have no reason to suspect that the price is just going to boom on its own. It's going to need Bitcoin to do that first. And like I said with Bitcoin, there's potential to see it go back to the golden pocket, which could mean the ability to pick up some cheaper Ethereum even at the 1600 level. So keep that in mind. All right, now we are going to move on to EGLD. With EGLD, we are still stuck in this downward descending channel. This is not a good descending channel to be in. We want to break out of it, but we have not seen the user base come in to really fuel the liquidity needed to do that, right? And that's understandable. Right now, a lot of DeFi tokens are experiencing the same thing. And part of the reason is because you still have a retail flight from risk on assets. And anything in DeFi, anything in emerging markets are considered risk on assets. As that happens, this is essentially accumulation time if you believe in the asset. Like if you believe in any DeFi projects, if you believe in DeFi in general, if you think it's going to be a good long-term investment, these are accumulation stages. That's what they are. And I look at these areas to be my accumulation points. So in each of these areas, I have purchased and added my accumulation because I'm accumulating a lot less DeFi now just due to the SEC risk. But still, when it came down to this 28, 29 level, my orders triggered, right? I always keep a few orders underneath this. So I still have a few orders now as low as 25. I think 25 is my lowest one, which is right where my red line is here, just in case we touch it like we did there. Aside from that, not too much else at a higher level. And we'll see. If it starts booming, then maybe I'll pick up some at spot. But because I've reduced my allocation overall for DeFi, a lot of the funds that I would have spent on EGLD, Ethereum, Cardano, all these other assets are instead going into Bitcoin. So we'll see how that goes. And I may have to change up my thought process. But what I'm looking at in terms of moving up here, if we somehow see a boom with all of DeFi, it starts to happen, or if there's some news that puts MultiversX over the top, then I would expect to see EGLD jumping up and hitting resistance at 42. Breaking out of this descending channel top is really the key. Until you see that happen and you see us get support on the top of this, then we're still in that channel. And as long as we're in that channel and we continue in that trend, well, then we keep looking at this bottom area for buy targets, right? And I'll keep giving you those every couple of weeks or every week whenever, if there's more activity in the markets and we do more videos, you'll see more of it, but that's what I'm looking at. And remember, in my description of the YouTube video, all the links to my charts are there, so you can take a look at this chart anytime you want and see how the descending channel is moving. Now, we are gonna move on to Cardano. Now with Cardano, you see a very similar pattern as you saw with EGLD. I've talked to you about this before, but it was very bullish when we broke out of this descending channel. This is what I want to see with EGLD. And then we saw a big bounce here. Now after this bounce, things were going good and we likely would have seen another move up. But this here is when the SEC announced their lawsuits against Coinbase and Binance and calling them unregulated securities exchanges and naming Cardano as a security. So when all this stuff happened, this was essentially due to the SEC. This is all due to the SEC coming in and doing that stuff. And you saw a huge sell-off. Cardano went down all the way to 21 cents. Now it's somewhat recovered. It's sitting at 28 cents. But the key is that this is not a recovery yet because we're still getting resistance on the 20 exponential moving average on the daily. In order for this to really be a recovery, I need to see Cardano move above that 20 exponential moving average and get support on it. Like you'd want to see the moving average go like this, and you'd want to see the price go like that. Until that happens, very, very likely that we see Cardano drop back down to the 21 cent level unless markets just start booming again. So the play here is if you're trying to accumulate Cardano, to put orders at the first level here right at the top of the descending channel, and then the second level is anywhere in between. So basically from the 15 cent level all the way to the 28 cent level, depending on how low you think it could go if the market corrects, is where you would want your orders. You're obviously more likely to get them up here. You're less likely to get them down here. So around 21 cents is a more likely buy level. Around 15 says is a less likely buy level. But that's how you kind of mitigate your risk, right? You decide where you would want to buy and you put orders at that level. Until I'm more confident, I will not be more confident in Cardano actually recovering until I see it get past this huge volume resistance area. And this is really between a large range, like around 33 cents all the way to 50 cents. So it has to really break through that 50-cent level and get support there, which means basically 100% up move. It has to go up 100%, get support, and then keep moving until we break above that 20 exponential moving average on the daily. We, friends, are still in a downtrend. This is not an uptrend yet, because even if you zoom out and you look at this, look at these moving averages are going down, right? So until they start moving up and we really see sustained price action above these moving averages on the daily, showing us that we are starting to put in bullish crosses, we're still at a bearish level. You can see that on the RSI as well. So the RSI is still sitting below the 45 level. It's actually flirting with the 45 level right now. It's touching that level. So we really want to see a move up, go above the 45 level. The RSI should get support there, and that would correlate with a move like this, right? You'd see a move like that and then start moving into an uptrend. If we see this type of move, good, then we may be generating a new trend. But right now, the overall trend is still negative, right? We just have to get past it to a certain point to really break it. If you really want to see Cardano effectively break its downtrend overall, that really has to go and beat the 55 to 60 cent level, right? You really want to be above this horizontal line until you consider it a real uptrend, because this is all part of the downtrend, right? Once you start seeing Cardano make moves like this, hold on, let me draw it again. Once you see the move look something like that, well, then you are suddenly breaking this entire downtrend by moving above the point where that downtrend hit its peak, okay? So that's how you're going to detect whether or not you're really in a bullish market. Obviously, you make that speculative decision early so you can, take profits along the way. But for right now, it's in a very indecisive, undecided area. Okay, so keep it in mind. We're going to keep an eye on all of these, and we'll come back at some point soon. And just honorable mention, because I bought some Pepe and I'm just hanging on to it. The Pepe chart has been looking pretty good too. I mean, obviously this downtrend sucks. It got creamed with everything else, as you'd expect from a meme coin. But somehow this meme coin is getting more investment. I don't really get it, but we'll see. We'll see what happens. I'm going to hang on to this for the long term. So if this thing shoots up like crazy, then it'll make me some money. But if it goes to zero, I'm not going to lose that much. So at the end of the day, I'm okay with it. We'll keep an eye on this too. And if I see anything interesting on this Pepe chart, I'll let you guys know. I'll let my subscribers know in a special video for you guys if I see anything. Subscribers, I'm going to try my best to get a few more updates out to you if we see major moves in the market. All right, it's not going to happen this weekend because I'm going to be out of town a few days over the weekend and I'll be traveling. So when I return next week, we'll start going over more and we'll see where things are. I'm going to do a dive into some hardware wallets. I was trying to get in touch with a couple of them to see if they wanted to do giveaways. Maybe they don't need to do giveaways right now because of what happened with Ledger. Either way, I'm going to keep trying and I'll try to get you guys more free stuff if I can. Regardless, I will see you soon. And if you want any more information, you know how to reach me. Thank you guys for watching. I'll catch you later. Peace.